and we avoided a St. Valentine's Day massacre. Market is up 253 points. This is Mark the Meerkat in for D7, who is out on assignment right now, and we want to take a look at what happened in the markets today. Hey, this morning they talked about the Consumer Price Index, the CPI number, was only supposed to be going up about 0.3%, and went up 0.5%. And it was the concern over the inflation that was supposed to have been the cause of the downdraft the last week or two. Well, guess what? The markets dropped 200 points, or I should say the Dow dropped 200 points in the futures upon the announcement of that at 8:30 Eastern Time. And then guess what? The markets came back during the day, and then the Dow ended up 253 points. Let's take a look at the numbers overall. Ended up being a nice bullish day on the markets. And we actually broken into up legs now on this down market. So we've got the S&P up 1.3%. The Dow was up 1.1%. The Qs were up 1.8%, leading the way up. Then we got the small cap Russells up 1.8%. And look at Bank up 2.1%. Whew, that is a strong move up, folks. And then the financials were up 2.3%, the overall financial sector. And then look at that VIX, down 22%, down to 19.26. And we are just 2 days ago, we're at 30, folks. So the fear is coming out of the market. Now, I'll tell you what, it spiked during pre-market and then came right back down when the market opened and continued to fall during the day. All right, let's take a look here at oil. It was at plus 2.6%, late boom on that one. Then we have the gold and silver, we're up over 1%. And then as far as a trend trade, we are at 0.49, folks. The trend trade was triggered for today. That's it on the numbers. Let's take a look at the charts and let's analyze these, because some things have now changed since we looked at them just 2 days ago. If we look here on the SPY, which is of course the ETF on the S&P 500, we were starting to come back up, but we were hitting our heads on this green line, which was the closing line, and we were below the 20 and the 50. And then we had the Fibonacci's on here, which I'll talk about in a minute. But now, officially, as of today, we are now in an up leg, which makes this right here a swing low, which is a lower swing low than the swing low here at the end of the year. So we are now, if we go up here and we get a lower swing high, then we are starting to look really bearish. But right now we're recovering, but we're not quite back up. But officially we are now in an up leg and have a new swing low here, which we haven't had any major swing lows in quite a while. So knowing that, let's take a look here at the Fibonacci. And when we looked at this the other day, we said 2 areas to watch out for was the 50% retracement. And guess where it tagged today? Right there at the high of day. It tagged it right there at the high of day. It tagged the 50 and then just came off that high. So we are right at the 50% retracement on the Fibonacci retracement. And again, the other area we need to watch for is this 61.8. And of course, as far as moving averages, we still have the 50 moving average overhead and the 20 moving average overhead. So we're still fighting to get through that, but we are officially in an up leg. I'm actually willing to put a buy on the markets now that we are officially in an up leg, but with some caution in that this just could be a bear pullback if we come up here enough. The other nice thing about it, look at down here under volume. Yesterday, which ended up being just kind of going sideways most of the day, low volume, but we had increased volume today. That's helping us here. But again, we'd like to have seen even more. But so a cautious yes buy area here now on the S&P 500. The Dow looks very much the same. Came back up here. It was stalled underneath its closing line from 2017, and boom, today it broke out. But it did not have increased volume today on the Dow. If you see, it was actually lower than yesterday. A little bit less optimism on this one. Now here's the QQQ. And again, we are officially in an up leg now. We have 2 candles of higher highs and higher lows. We didn't have that until today, folks. So again, this is a swing low right here on the NASDAQ. And it actually broke out from its 50 moving average today. That's very, very strong. And look at that. With increased volume over yesterday, we're stalled below it. That's very strong move. And again, I'm willing to put a buy area here now on the NASDAQ, which has been, of course, we talked about the other day, the FANG stocks that were leading the way up here in many of the markets, and they continue that trend again today. But now it stopped right here at this prior resistance line. It broke it and then fell below it, but now could be resistance again. And we still have the 20 moving average. So some caution on this call on a buy that we're back to bullish. Again, we're in an up leg. We're not, but we have to wait and see if we get a higher swing high or not. All right, let's take a look here at the small cap Russell. And again, this one has been lagging a bit from the others. It closed way below where it was at the end of 2017. Been resting on this 200 moving average. It made a nice big bounce up here today with increased volume over yesterday's, not doji, but just kind of a sideways action from yesterday. It's up to the 100 moving average now, hitting its head right there. All right, and then let's take a look at that VIX. Oh my goodness, this is on the daily chart. So again, outrageously up here to the 50 on the VIX, which is again just outrageous. But now there are allegations out there with a whistleblower that there were some manipulation going on to run it up there so that folks can make money on those leveraged ETFs on the VIX. So there are some allegations about that and under investigation. We'll see if anything comes of that. But today, again, in pre-market, this sucker, well, the actual VIX didn't, but the ETFs on the VIX did because they trade in pre-market. They rocketed up, and then by the time the market had opened and they had settled down some, and then as the day went on, you can see it just kept falling here to a new low from the last 2 weeks here. We're below 20 at 19.16, right to the 20 moving average. So if the fear is now out of the market, again, that's another reason why I'm saying on the S&P and on the NASDAQ, we seem to be in a buy situation here. But again, always have a stop in place because, if it does hit its head on those further resistance lines coming up and starts to turn down again, then you'll be out at a reasonable loss or with at least a minor profit. So if we take a look at the overall markets here, they are still recovering from the big downdraft that we had since February the 1st. However, they did break some areas of resistance today, and so we're looking more and more positive on the markets. But again, caution, we're kind of in a no trade zone here. It isn't fully committed to one way or the other at this point. However, personally, I am long several, and I have made some money on my swing accounts that I've already gotten out of, and I stopped out on a couple, at my stop out price and for a controlled expense. Hey, if you'd like to trade the Grok Tradeway, there's a way to get introduced to that with some free webinars. That's right, we can go to groktrade.com. That's groktrade.com, and we have a free stock 101 tutorials. That's right, free. Go ahead and put your email information in here, and then once every other day you'll get a total of 6 lessons here just to tell you about what trading is. And if you're into that cryptocurrency here, we actually have a chart pattern guide for cryptocurrency specifically, technical analysis in that area. So you can put your information in here, and we'll forward those to you. This is Mark the Meerkat. Hey, just remember that the trend is our friend. We want to trade in the direction of the friend to keep the odds in our favor, because 70 to 80% of all stocks follow the broad market indexes. Trade well.